Man, I did an open house this weekend and it was a really interesting open house. You see, it was a single story with a 3-car garage and it was in a price point where I had a lot of first-time home buyers come in, but I also had a lot of folks that were looking to downsize come in. So I was able to have some fantastic conversations with people that really kind of helped me shape this week's post. You see, very different one end of the spectrum to the other, right? Like if you bought a home, I'd say really pre 2015 or so, your market was very different than what it is now. Similar, like if you bought a home back in the 80s, your market is very, very different than it is today as well. And let's kind of talk about that and break that down in a little bit more detail. So last week's, the numbers, they were a little interesting. They were really high. We had a lot of information come in from other MLSs. And my original knee-jerk reaction was, hey, I don't want to see all this data. I really just want to focus in on North Texas. But the more I got to thinking about it, I think I'm just going to play this out for a little bit. I'm curious to see what's going to happen because the information has really just come on to this MLS. Like the merger just happened about, I think it was 2.5 weeks ago, if memory serves me right. And you'll notice when you look at the numbers, now things are kind of evening out a little bit. So like I said, I'm just curious to see how this plays out. I'm not saying down the road I won't start focusing more on just the Tarrant County, Dallas County, Wise County, Denton Counties, North DFW. But for right now, I just want to kind of see what happens with all of MLS. Now, what I did see this week, which was actually good news, there were more homes that came off the market than came on the market, but we still had a really high number of price reductions. The mortgage rate is sitting right about the same as it was last week. We're looking at about 6.35. Now, that's going to fluctuate just a tiny bit depending on you and depending on where you look. Also, let's talk about what's going on with the Fed, the dollar, what's going on, right? Well, since the Fed cut the rate on September 17th, the dollar index has actually risen. And while that can be positive in some ways, it doesn't mean that mortgage rates are always going to go down. Now, my thoughts on that is the market feels uneasy right now. It really does. Powell's drop came across like an apology you didn't really want to give. You know, you ever ask your kid to apologize to somebody and they're like, sorry. That's how the rate drop felt. It just didn't feel like something that was great and it didn't really inspire investors. And because of that and, inflation, I believe mortgage rates are more likely to stay where they are or potentially even go up as we move through 2025. And that's in spite or despite, or however you say that, of the Fed's cutting the rate. So I truly believe that even if the Fed cuts the rates a few more times this year, we're still not going to see a relief in mortgages. And I really don't think we're going to see rates dip down below 6% until like the mid or the late Q3 of 2026. Now, one of the key factors that I'm going to keep an eye on is going to be inflation, right? So the Fed's goal right now is a 2% inflation year over year. However, it's gone up to 2.9%, and it was just at 2.4% just a few months ago. So that's probably one of the big factors, too, that's creating an atmosphere to where mortgage rates are not going to go down. So until we start to see those inflation come down a bit, I don't think we're going to see mortgages come down. Also, I want to warn people, I don't want to go into in too much detail. If you're curious about it, comment, message me, whatever you want to do, get in contact with me, and I'll explain why I think consumers should probably stay away from 3-2-1 buy downs, especially when you're looking at new construction. Now for sellers, please understand I'm going to sound a little preachy, but it's coming from a place of love. So I hope you'll go on this little mind venture with me real quick. If you're over 45, and a lot of people would be surprised how close to 45 I actually am. Please know today's young buyers aren't approaching homeownership the way we did. They're more educated, they're more cautious, and competing against folks that we just didn't necessarily compete against, right? And they've got higher interest rates, higher taxes, higher insurance. These first-time home buyers have a lot more hurdles to overcome than we did back when we bought our first home. If you bought a home, I'd really say before 2015. I use myself for example. When I bought my first home, it was $120,000. Today, it's worth about $350,000. I rent the home out from anywhere from about $2,100 to $2,400 a month. And if I were to buy that same home today, I'd have to be way more prepared than I was back then. And that's exactly what I see in younger first-time home buyers. They're taking their time. They're asking all the questions. They're speaking with the lenders. I mean, they really have their ducks in a row way more than I've seen first-time home buyers in the past. They really want to make sure they're making a good long-term decision. And I believe that's why sellers should consider helping the next generation. Yes, a cash investor might net you a little more at closing, a faster closing potentially, maybe even some better terms, but I encourage you to think about the long-term impact. I've done this myself. I've only sold one property, like personally. Every home I've ever bought, I've kept and turned it into a rental property. Last year, I sold a rental property, and I had two offers. One was a VA, or no, sorry, not a VA, an FHA buyer, and the other one was a cash investor. And the FHA buyer actually net me about 8,000 less. Like, yeah, it would have been great to have an extra 8,000, but for me, it wasn't going to make or break the bank. Like, it wasn't going to be a life altering decision. So I went ahead and I moved forward with the first time home buyer. And before we put that house on the market, I even told my wife, I said, listen, I don't want to sell this house to an investor. I want to either sell it to a couple that's going to use it for a rental property, like for themselves, or I'd really like to sell it to a young couple that can move into it and start to build their own wealth. So if your home fits a first time home buyer pool, kind of fits in that range where you think first time home buyers might be attracted to it, and a first-time home buyer crosses paths with you and they submit an offer, I'd really just encourage you to kind of dig down deep, find a little bit of, I don't know what the right word is, because I really don't want to try to hurt anybody's feelings. I'm just trying to help you understand what I'm seeing out there. And some of these younger folks, they're really struggling with home ownership. I mean, they've got high taxes, high interest rates, high insurance, high prices. Like, it's difficult for them out there, and they're competing with all these investors. But when they get that home, there's a good chance that you can help them generationally. Like, not only are you going to help them potentially, you could help their kids, you could help their grandkids. Hell, you might even help their great grandkids just because you decided to sell them that home and didn't go to the investor. Buyers, and especially first-time home buyers. Buying a home is scary, and I get that. And for men, I can understand because you can tell I'm a man. And a lot of that fear is really at the end of the day, a lot of that fear is really about fear of commitment and your goal to protect your family. And that's a good instinct. I mean, it really is. It's a very good instinct. Just be careful not to let information gathering turn into procrastination, and understand your first home might not be your forever home, no matter how much you want it to be. Because when you buy your first home, the way you live your life, your goals, your day-to-day life, it can be very different after a few years, especially if you don't have any kids. Because once you have kids, a lot of things change. A lot of things that seem important to you aren't important anymore. And things that become very important you would have never even imagined. So don't put so much weight on that first home being your only home. There's a good chance you're going to buy that home, build some equity up. You could potentially sell it, turn it into a rental property, do whatever you want with it, but you can use it as a stepping stone to buy your next home. And honestly, folks, at the end of the day, home values are going to continue to go up. Sure, there will be ups and there'll be downs and there'll be uncertainties and there'll be little micro crashes, but overall, long-term, home values are going to go up. And when you step back a little bit and you look at all the new buyers that are stepping in the market, I mean, you've got your regular investors. When I say regular investors, you got your folks that just want to own a couple homes and have rental properties. You've got your larger corporate investors. You've got your overseas investors. You've got REITs. You've got now the whole blockchain setup where people are going to start buying homes through that way. So you've got a lot of fingers and competition in buying real estate. And something else, and I'll end this video on this right here, is I always think it's funny. You see some of these people on social media talking about how you shouldn't buy a home. Meanwhile, and they say they don't buy a home, they rent a home. Man, they're so full of it, it's not even funny. You're right, they don't own the home. Their LLC or their S-Corp owns the home, and they just lease it back from themselves. So don't sit here and tell me that ownership isn't one of the best ways to build generational wealth. But with that being said, if you guys are thinking about buying or selling, or you just want to have a conversation about the market, you can always reach out to me. Look, wherever you're watching this, I'm sure there's a good way to get in contact with me. Shoot me a text, shoot me a DM, smoke signals, however you want to get in hold with me. I always love talking to people about real estate and helping them build their wealth through the buying and selling of homes. So until next time, I hope you have a great day.